All right, hey everyone. Mark here, Mark B Markets. Thanks for joining me for another Bitcoin video analysis. Hold on, I have to adjust my microphone. Okay. All right, so welcome everyone. Now today's a holiday here in the US, so I don't expect a big group here. So it's a good time to get questions answered. Also, I want to keep this at an hour. So we have a few things to talk about. Again, if you're new to my stream, please make sure to, for one, if you have a question about a stock or a market, please share it in the channel now. The way this works is I'm going to first go over the economic calendar very quickly. Then we're going to get into my Bitcoin analysis. Okay. And then after that, I'm going to answer your questions. I'm going to try to keep that Bitcoin analysis somewhere between 10 and 15 minutes if possible. And I want to spend more time on your questions. Okay. So please share your question in the channel now, whatever platform you're on. Also, if you'd like to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey, which is why I talk funny half the time. All right, so let's get this thing started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, hey everyone. So first things first, I want to go over the economic calendar. And then I want to talk about a couple of things before we talk about this Bitcoin chart, because there's a couple of interesting things that I just want to mention, some food for thought. Okay, so let's just say hello. Hey, Will, we got Will from London, Mr. Plow, Kai, good to see you all. Wedge, Kai, I haven't made that role change yet. I'm going to do it. I've just been busy with other stuff, but I'm going to get it done. I haven't forgotten. Hey, guys, over at TradingView, we got Stian, good to see you. Jude, all right, people, thanks again for joining me. All right, so first things first. Economic calendar. Today is Monday. Yes, it's a holiday here in the US, so you're not going to see much price action anywhere. This stuff in Bitcoin, we're going to talk about this here in a moment, but there's nothing to get excited about. Number one. Number two, let's talk about what we're looking at this week. Again, I'm going to condense the economic calendar to the most important events. I'm not going to show it on screen because I looked it over previously. So here's what we got. Okay, we have Wednesday, which is June 2nd, I believe. No, I'm sorry, June 1st. Wednesday, June 1st. We have the ISM manufacturing PMI here in the US. That number usually comes out around 10:30 a.m. Eastern time. It's not a huge deal, but it might be. So you want to keep an eye on it. It's a US number and it could affect inflation expectations and all other nonsense. Okay, so especially if you're in stocks, you want to keep an eye on that. The other big thing on Wednesday, the 1st, is the Bank of Canada has their rate statement. So again, important if you're in a Forex relative pair. Otherwise, that's usually not a global market mover. Okay, now on Thursday, the 2nd, June 2nd, we have ADP unemployment. Now that is usually a preview of non-farm payrolls, which comes out the next day. So the ADP number, if there's any unusual surprises, can have an effect on the S&P. So again, you want to be aware that the number's coming out. Most of the time it's a non-event, okay? But I wanted to mention it. Now on Friday, which is June 3rd, we have non-farm payrolls. Now that is the most important economic number that we get every month. It's scheduled at 8:30 a.m. Eastern time, right? The first Friday of every month. Now, again, doesn't matter what the expectations are. What matters is if there are any surprises. If there's a surprise, you can get a dramatic move in the market, especially in this interest rate sensitive market. All right, so those are the major things to keep an eye on for this week. Most in particular, if you want to condense that all into one, it would be the NFP report, okay, on Friday. Now, keep in mind, I mentioned these to be aware of these news events because volume can get very light or erratic going into such a report, like an FOMC meeting, for example, right? No one wants to take any big positions. We're talking about institutional traders and money managers. So volume can get very erratic and very light. Keep that in mind. That NFP can have that effect. Also, remember, this is a holiday today, and that holiday is going to extend throughout the week. It's not like everyone's going to go back to work tomorrow, right? That's how it works here. So we're in summertime, and summertime volume has a tendency to be lighter, all right? And that doesn't mean that there's less movement. It could just mean more erratic movement, just something to keep in mind. All right, so that's enough about the economic calendar. Now, before I get into Bitcoin, I just want to mention something very quickly, just for a couple of minutes here. I want to talk about the, some mindset, some market mindset topics, okay, or topic about market mindset or internal psychology. If you look around, all right, it's very important as a retail trader to have an awareness of the type of material or the type of content that you're consuming, right? It's like eating a pizza and putting a piece of broccoli on it and being, oh, my pizza is, it's more nutritious because I have broccoli on it. No, it's still bad for you, okay? The pizza is bad for you. If you eat the broccoli alone, yes, that's better for you. But people like to rationalize just because there's a piece of broccoli on the pizza that the pizza is now healthier. No, it's not, okay? So when you consume market information, you have to look at it in the same light. That's why I'm bringing up that example. Now, what am I talking about here? If you ever notice, a lot of these, whether it's a fake guru, whether it's a software provider, whatever it is, they're trying to sell you something. Usually the pain point that they present to you is external, right? It's some sort of external factor, something outside of you. Oh, look, I have this magical tool that's going to make you millions of dollars. Oh, look, I have a special strategy. Oh, I have this special platform, right? And it's going to solve all your problems. Do you know, I spent over 10 years, right, believing very similar lies about a particular oscillator, right? It's going to solve all my problems. Not only is it going to make me money, but it's going to help me grow my hair back and lose weight. I'm still waiting for my hair to grow back. Okay, so my point is, they're always focused on something outward on you, but really, the problem is not there, right? So they make it sound like this is the one thing, the missing link that you need to become a profitable trader and make millions of dollars and have hot girlfriends and all that other stuff, right? But that's the dream that they sell you. Again, I have to emphasize this because most of us, we don't realize this, especially beginners. We come into this game thinking we want to make money. Okay, again, now I'm getting into the internal. We think we want to make money, but we don't. We really don't want to make money. What we want is the dream of making money, and that is what we pay for, okay? Thousands of dollars for a dream. Oh, look, I'm going to teach you how to make a $500 account into $50,000 in 2 months. That's a dream. While it's possible, even an experienced trader would have a very hard time making something like that happen. But they sell this dream to novices all the time, okay? Now, so what am I talking about? Dream or internal, or we don't really want to make money. Making money, the actual process and the objectivity that you must have to make money is not fun. It's not pleasant, it's not fun, and it's a struggle with controlling your emotions. Now, let me just bring you an example real quick, because we have this Bitcoin situation going on, and it's a good example, right, to lead into Bitcoin here. People see a situation like this, okay? Now, that's going to trigger emotions like I'm missing out. Oh, it's the next run higher. Oh, and all the fake gurus are going to come out and reinforce that fear that you have inside. And if you can't control yourself, you might take a trade in this, especially if you have no sense of like risk or what a day trade is versus a swing trade. You're going to look at this as something meaningful, right? As a day trader, sure, there may be some meaningful activity there. As a swing trader, this is meaningless. All right, now I know that, and I have the confidence to stay away from it because I know what I'm dealing with in terms of probability. I know the problems and I know the things you can't see. But my point is this: if you can't control your emotions, and they can be very subtle, right? Like a fear of missing out or a fear of losing. If you can't control those, it doesn't matter what strategy you use. You will not make money, okay? As far as strategies go, it's about the context and about the mental processing that goes on in your mind when employing the strategy, not the strategy itself. So, for example, you can use a moving average crossover system. It's the most basic system ever, right? And after the fact, it looks great. Oh, if I just held on over here, I would have made this much money, right? All that kind of stuff. But the thing is, when the market goes into some type of consolidation and you take every signal, you give back all your money, and the system basically is not a winning system, right? So you get rid of it and you find something more sophisticated. Oh, this one has an RSI on it and it's got a moving average. So this one's more complex. It must be better. No, you're going to have the same result. You might as well flip a coin. Again, it's not the system, which is external. The problem is internal. You're not looking at the context of the system. where is that crossover occurring? Is it a major support level? Is it a major resistance level? Are you going long into a major resistance level on the larger time frame just because a 5-minute moving average crossover told you to? Do you know how to weigh the magnitude of risk? Right? If you can't answer those questions with any degree of confidence, you can't win. All right, so I just wanted to mention a couple of those things in there. Again, about market mindset. Stop getting caught up in the dream and learn to be objective. Learning to be objective begins with having a set of rules, something to give you an honest market view. Okay, what is the market saying? Not what you think it's saying, what is it actually saying? And let me just give you a quick example of that. Like you may have this signal right now, again, that's taking place in Bitcoin. It's a buy signal. But how does this fit into your rules? Well, what rules? It's a buy signal, I'm buying it. Buy signals and sell signals are not created equal, right? You weigh them with the context. So in terms of swing trades, which is what I'm looking at here, this is meaningless, okay? Why is it meaningless? Because we haven't taken out a key resistance area, which is 34K. If we can't take that out, this is meaningless. This is a very low probability situation. You're more likely to buy into a false breakout and get caught and watch this thing go back to 29K. Now, is it gonna go to 29K? I have no idea. I don't pretend to know. I'm not trying to figure this out of where the market's going to be in the future. I'm looking at probabilities. If it goes to 29K and finds a support and gives a buy signal there, well, that's another story, okay? How far will that signal go? I have no idea. We're still in a bearish structure here, right? Now, I'm not gonna be bullish on Bitcoin until we clear 34K and pull back and prove that the bearish structure is no longer in play. This is too early. All right, so I just wanted to cover a couple of those things just as far as market mindset and internal psychology. Keep in mind, the problem is not external, it's internal. If you can't figure that out and you can't look at the market in objective ways and minimize those emotional drivers that make you, that lead you into emotional decisions and not objective ones, you can't win. I mean, the market is highly random to begin with and very hard to beat to begin with. If you can't get beyond your own psychology, you might as well go to a casino or play the slot machines on your phone, because you can do that these days. Okay, you might as well flip a coin. It's the same result. Understand that. Understand that if you're serious about this game. All right. Again, that's serious trader talk. The average retail trader is not going to be interested in that because they just want to make money. The first question that I get, usually from a novice, one of the first questions is typically, where do I take my profit? That's what they want to know. That's really not a good question to ask, because profits are random. Where do I take my profit? Because obviously they hold on to positions and they give money back. Profits are random and should be viewed in terms of risk. So the real question is, how do I evaluate risk and measure that in terms of the profit that I'm in right now, right? If I have a profit, how do I look at that from the perspective of risk? Risk should always come first, and protecting your capital should always come first. That's not fun. It means a lot of times you have to let a market run away without you. It means a lot of times you have to get out of something and respect your risk and respect your rules, and then watch the market go your way anyway. That's part of the game. But if you're respecting your risk, you should be okay in the long run. But people don't do that. They get frustrated. Screw stops. I don't need stops. Every time I get stopped out, it goes my way anyway, except for the one time, right? That Bitcoin has a huge break and you're stuck in it because you had no regard for the risk. So again, ask yourself, are you here to make money? If the answer is yes, then are you willing to do what it takes? The unpleasant things, because it's all unpleasant. There's nothing pleasurable about waiting, about taking small losses regularly, watching the market potentially run without you. Those are unpleasant things, but that's the nature of this game if you want to make money, because if you do the right things, you then go toward protecting capital, not chasing profits, which again, that's what the herd does. And that's, if you ever wonder who's on the other side of your trade when you win, most likely it's someone on, another retail trader like you, not a market maker or an institutional trader. They're usually out a long time ago or whatever, because they operate on better information. It could be a market maker, but most of the time you're making that money most likely from a retail trader, or profits that were gained from retail traders. For example, if it's a Forex broker. Think about Forex brokers. And then I'm going to jump over to Bitcoin here in a moment because I know I'm talking too much. I don't want to talk about this for 5 minutes. But think about a Forex broker for a minute. Forex brokers bet against their customers, okay? Because they know that there's a like 70 or 80% chance that that customer is going to wipe out their account. Whose side would you want to be on? Would you want to be the Forex broker, or would you bet with the retail trader, right? Forex brokers, their whole business model is based on the retail trader failing. Same with a market maker who buys order flow, okay? When they buy your order flow from a broker, why are they so anxious to buy that order flow? And why are they willing to spend so much money? Because if you have $5,000 or $10,000 in your account and you lose that money goes into their pocket. That's why the order flow is worth so much money. Okay, anyway, let's jump over to the Bitcoin analysis. I see a bunch of questions. Anyway, so food for thought. All right, that's my holiday observation. Not really a rant, but just something to think about. All right, let's talk about Bitcoin more in a little more detail. So we have the situation now. Altcoins are going to be affected by this. Again, this is holiday price action. It doesn't really mean much in terms of the bigger picture. Again, like I said, this is the key area up in here between 32,000 and 34,000. If you can't clear this, if price can't clear this, we are just in a lower high consolidation, which means 25K is still in play. Oh yeah, by the way, I wrote an article on TradingView yesterday. No one read the article, okay? I spent 3 hours writing that article and I got like 1,500 views. That's really low. So just so you know, I'm not going to do long form articles anymore because it's just not time efficient. I can't put in 3 hours and then hope that I'm going to have like a decent read. And I mean, there's a lot of other factors. It could be the holiday, it could be the title, it could be a lot of things. But the thing is, I still spent the 3 hours and I got nothing out of it, right? I mean, it's not like I'm looking for whatever, but if no one is interested in reading it, then I'm just wasting my time and your time. So I'm going to stick to the short form. I know a bunch of people told me that they prefer the long form. I'm going to stick to the short form because that same article, I could have written that in 10 sentences or whatever, 5 sentences, and had that published in an hour, and I would have gotten the same 1,500 views, and I wouldn't have felt so bad about it, because it's not very encouraging when you write something, put a lot of time into it, and no one's interested in it, right? Maybe no one's interested in Bitcoin right now. Anyway, just wanted to mention that. I'm going short form, all right, with occasional long form when the time calls for it. Now, back to Bitcoin here. So my point of my analysis was how to adjust for the swing trade. I called a short on previous Monday, okay? Trade of the week. I called a short, and I called that short on this move right here, which is 29,200, right? Break of 29,200. I actually mentioned about a limit order. That trade was worth about 1,000 points if you had held that, okay? And now the trade is almost stopped out. In my TradingView article, I mentioned that you can tighten the stop to 30K, which now would be stopped out for a loss of like whatever, almost 1,000 points. But that's not, it's a loss. That's bad. No, it's not bad. It's reduction of risk, because the original risk was about 2,600 points. Okay, that's what actually saves you money over time. Now that was one choice. The other choice is you could have stayed in for the original stop, which is higher, but it looks like it's going to get stopped out if it continues on this route, or this thing, you also had the option to get out while this thing was around break even, right? Those are the 3 options I wrote about. And what you choose is not going to come from the chart. What you choose is going to come from your own risk tolerance. And if you don't have a good definition of that, you're most likely going to second guess, okay? And that's not something you want to be in the habit of doing. It's a very common mistake. Anyway, so as far as Bitcoin goes, again, this is meaningless as far as swing trades go. If anything, it could be setting up for a short. And this is the zone. I mean, if this thing starts pushing in between 32 and 34K over the coming week, then this is an area where you can get a high probability bearish reversal, okay? In this area, if the bearish reversal shows up and you're interested in shorts, that would be your best reward risk area to take such a position if it confirms. Now, keep in mind, if it clears 34K, that's not what it should do if this structure is going to stay bearish. It should not. I mean, I'm not talking about like if it goes to 34,500, that doesn't count. It needs to clear it. Like you need to see like 35, 36,000, like in the next day or so after the 34K break. It has to happen quickly. If it hesitates and you see like a bearish reversal in here, that means this structure is still most likely bearish, okay? A lot of people are going to go along thinking, oh, the breakout, this thing, blah, 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 blah. They're going to listen to fake gurus, but that's what probability says until this clears. So my expectations are going to be with the structure. I anticipate that we're more likely to test 30K or I'm not, sorry, not 30K, 25K or even possibly 20K if this resistance area up here sticks. Okay. Now, the stock market has been strong over the previous week. There were a bunch of company reports that helped it along. That can change quickly. You have to understand something about bear market rallies. They can look very convincing, but if the macro fundamentals, the macro environment has not changed, then they're vulnerable, right? They're not likely to continue very far. So that's an important factor here. Bitcoin is just following the S&P generally, right? So if we get some bearish catalysts that come back and S&P and NASDAQ start pulling back and start giving back the spectacular move we've just seen over the previous few days, Bitcoin is likely to act in a similar way, unless there's a separate catalyst. But I don't know of one, right? Nothing major. So if the macro environment hasn't changed, and again, we have to judge the bonds, the dollar, all that other stuff, because that's what makes up the macro environment, then this thing's not likely to go anywhere on the long side. So I'm not interested in longs at all. All right. And I only take longs on Bitcoin. So, that's all I see here is a potential selling opportunity for a test of 25K. Do we hold 25K? I don't know. Lower high theoretically leads to a lower low, unless it doesn't produce such an outcome. If it doesn't, then we have to adjust. But at this point, I'm going to suspect that that's what it wants to do, unless it tells me otherwise. All right. Does that make sense? Okay, so that's pretty much my Bitcoin analysis. To wrap that up and just into a summary, look for a lower high above that 32K into 34K resistance, and look for a test of the low over the next week or so. There is no setup in this thing at the moment as far as shorts, but the setup is what you want to anticipate in this area. Okay, again, you have to be prepared for it, and if the market confirms, then you have to be prepared to go. I'm talking about swing trades here. Keep in mind, if you are a day trader and this thing wants to work its way up into the 34K area, there's a lot of day trade opportunity in that situation. Okay, if it works its way up there. I'm not going to talk about day trade setups and all that stuff because they change very quickly. And if I tell you one thing and it changes, it changed. That's the day trade time frame. Okay, it's highly random, and you have to be able to adjust very quickly to it and that kind of stuff. So I'm not going to talk about that, but that's my point here. You're looking at 34K possible resistance, right? If it breaks above, we have a potential change on our hands. I would be expecting something similar from the S&P, okay? Something compelling. Maybe the bond market breaks out and starts working its way higher instead of working back toward its low. Then I'd be a little more convinced. Otherwise, I'm anticipating consolidation, which is what we're in, or maybe test of low, right? Just because the general trend is bearish doesn't guarantee we're going to get that lower low. But at this time, it's definitely a possibility. I don't like to use that word definitely, but you understand what I'm saying. It's still on the table. Don't lose sight of that just because we have a couple of green candles and a lot of big mouth fake gurus calling for longs. All right. So let's get to your questions. That's my Bitcoin analysis and potential setups and expectations for the coming week or so. All right. Let me see what we got here. I'll jump into that. Hey, Wedge, good to see you. I'll be okay. No problem. Oh yeah, he's enjoying the holiday. Nice. Probably on the beach. Hey, Kai. Okay, so dollar index. Let's take a look. Again, dollar index is very important to look at when you are considering the macro view, because I mean, it's between the dollar and the bonds. They're a reflection of each other, right? And the dollar, as you can see, has been pulling back over the recent few weeks. But is this bearish? Is the question, right? This is not exactly bearish. This is a decent pullback. But would I be looking to short the dollar here? No, not yet. I mean, look, we have support coming up on the dollar right at this area right here. What is that? 101.02. You better believe 100 is probably going to be an important psychological level. So even if the dollar goes a little further, yes, this could be hard to deal with as far as, like if you were shorting the euro, expecting the dollar to bounce earlier, and the euro pushes just a little further, you may get stopped out in that situation. But with the dollar looking like this, I'm actually looking for euro short. okay? There's no signal here, but we are at a level of interest, okay? This area is a level of interest. And if the dollar finds a reversal here, I am interested in shorting the euro, all right, as the way to play the dollar. So just something to keep in mind. There's nothing bearish about this yet. It's just a pullback, right? A more significant pullback, but that's all it is. And you know how these go, your bullish trend, you look to buy these pullbacks. So that's why I say we're not out of the clear yet as far as the stock market and Bitcoin, right? This thing goes back toward its high, even if it doesn't make the new high. If it makes an attempt, we're probably going to see some weakness, you know, in the other markets. All right. All right. So let me, that's a good question, Kai. Let me see what else we got here. Hey, Mr. Plow. Okay, Will, I said hello. Erhan, hey, how are you? From Turkey. All right, cool. Hey, Dan, good to see you. Okay, no problem, no problem. All right. Hey, Peter, good to see you. Your opinion about Bitcoin. Okay, okay, so I just explained all that. Okay, weekly buy signal. All right, so let's address that real quick. So Dan is asking about the weekly buy signal. Again, this is all about context. This weekly buy signal, while yes, it took out the previous week's high, that's interesting, but it doesn't change anything. So, you know, again, these factors or these signs or signals can be more significant on the smaller time frames. On the bigger picture, it doesn't mean anything because we don't know how far this is going to go. This is certainly not a bullish trend that it's in, not yet. So this may turn into one, but it's not there yet. So I give it very little weight. And when you're giving smaller weight to activity on larger time frames, then the more effective place to work would be the smaller time frames. Why? Because risk should be smaller if you respect the risk, because things can change here very quickly. I would not get any type of long-term opinions. I've been warning people about opinions. No opinions, because things change. People, oh no, it's going to do this. Oh, the Fed's going to do that. We don't know anything. Okay, the Federal Reserve is going to have their next meeting in June, and they're going to have a press conference, and maybe they'll give us some hints, but cannot have opinions. All right, until the market structure changes, I'm still sticking with, you know, bearish structure until I see bullish structure, or at least neutral range bound structure. I don't even see that yet. We have possibly that in Bitcoin, but you know, I'm not going to do anything with that. I'm still looking at the lower high until it proves otherwise. All right. That's what rules help me do. Hey, Elizabeth, good to see you. A smidge, okay, to dollar cost average and otherwise. Okay, yeah, I mean, nothing wrong. Look, as far as investing, right, bigger picture, dollar cost averaging, certainly we're not at highs. Okay, that's pretty clear. We're testing lows. So this is not a bad time to start your dollar cost averaging process, but you don't want to get too big too fast. What if Bitcoin goes to 20K over the next month or two? It's possible, all right? You have to be open to both sides. Like, people only want to hear about one side, but you have to look at all scenarios. It's possible 20K is still on the table, even with this look right here. 25K is still a possibility. 34K is a possibility. Okay, so working with that, you know, knowing that information, you have to understand basically how to navigate that based on the risk you're willing to take and what time frames you're working on. Like, if you're working on a 30-minute chart or a 4-hour chart, your outlook and your adjustments are going to be, they're not going to be the same as when you're looking at this from a swing trade perspective. You have to keep it all separate. All right, let me jump over to the other channel here because I haven't answered anyone's questions. All right, so I said hello, Mark B. Okay, so 20K, like I said, it's a possibility, but the probability right now, I mean, there's nothing there. We need to clear 28K. If we're even going to think about 20K, we need to clear 28K. Market refuses to do that right now. If we clear 34K instead, 20K even becomes a less probability. Does that make sense? Okay, Stian, any thoughts about PRE, USDT? What is that? Let's see, PRE, is this going to be a nonsense altcoin? Let's see. Pre-search. All right, let's take a look at the weekly chart. I like these altcoins that I don't follow because sometimes they can cue us into some opportunities that we otherwise might not see. Now, this situation here, let's see, I'm looking at bigger picture trend as it looks bullish, right? Midterm trend looks sort of bearish, right? Range bound to bearish because we took out these lows. Short-term trend is bearish. So we're nearer this low here. I see the weekly pin bar, okay? Here's the thing. So you're in this area. This is obviously going to be sensitive to Bitcoin, right? You're in this thing that's generally bullish, but if Bitcoin breaks, you don't expect much from these. I don't care what the hype is. I don't care what they say about it. You have to look at the environment overall. And until we have speculative money invited back to this environment, then these things, while they might start to show some promising whatever, they're not likely to go very far until the Fed gets behind this, right? Right now, the Fed is still in rising rate mode. That's not inviting speculative money. So anything that's highly speculative, whether they're penny stocks, altcoins, this and that, this is not the environment for them. So it doesn't mean that they won't go up at all. You're going to get some gyrations. You may get some hype that comes out that gets people excited about them temporarily, but they're not likely to go very far. Okay, because you're not going to get the speculative money pouring in from all the mindless Robinhood traders who don't know any better because they follow mindless gurus who amplify the herd mentality, right? You're not going to see that until that money becomes available. How does that money become available? Well, when the Fed lowers rates, right, companies now can borrow money at a cheaper rate. And what do? They may give some people raises, they hire more people, right? And all that stuff works their way back to the average trader. Oh, look, I got more money in my savings account. I don't know how it got there, but it's there. I'm going to invest because I'm an informed investor, right? I'm going to buy an altcoin because I'm going to be a millionaire, like all the other fake gurus on YouTube. That's how the money eventually works its way into the system. So we're in the opposite of that right now, okay? The Fed is not working with the market, it's working against the market. So keep that in mind. Technical signals in this environment on coins like this, which are highly speculative, are not going to be as meaningful. Watch Bitcoin. Okay, now you see Bitcoin has that bullish movement, right? Oh, a little bullish movement. What a coincidence. But with this game, you want to play the altcoin game, I would not suggest swing trades. If you're going to swing trade, stick with Ethereum, stick with Bitcoin, stick with like a leader that has more, smoother movement, that's a leader, right? Where money is more likely to go first. Altcoins, play the dollar cost average game, but you have to be, for one, you have to believe in whatever nonsense they're pushing. You're going to have to believe in that, number one. Number two, it's not a good idea to risk large percentages of your portfolio on these, okay? Because they're just like lottery tickets. So, you pick a small amount that if it goes to zero, you're okay, right? That's how you have to look at it. Now, yeah, when these things eventually have their cycle again and they start to run again, yeah, you're gonna have your stories. Hey, I put $500,000 worth of VeChain and now it's worth 10 million. Yeah, you're gonna have those stories, but those are lottery tickets. The chance of getting into something like that is by chance. There's no way to figure out which one, unless of course you're an insider or you know someone that made the coin and they tell you what they're going to do. That's another story, which is perfectly legal in the altcoin space. Okay. Anyway, good question. Let's jump around here. What else we got? Hey, Burak, how are you? Could you check on Palladium? Palladium. All right. So that's a more exotic pair here. Let's see. So XPD USD. Now, again, this is a metal. Gold hasn't been performing that well, even though the dollar had that pullback. Palladium is likely to behave in a similar way. Now look at this. This is the daily chart on Palladium. Okay, look at the recent structure. This is just a series of lower highs and lower lows. Look at the setup that's developing right now. Potential double top, lower high or failed high within a structure that's generally bearish, or we can argue, if you want to be a little bit more bullish about it, you can say it's a consolidation, which means, that is your low that you can possibly test. I would be looking for shorts, okay, in something like this, especially with the dollar poised to go higher. All right, so definitely like that on the short side. Also, it's not a bad idea to compare it to gold. Let's take a look at gold. I mean, look at gold. Similar situation, okay, not exactly the same chart, but they recently rallied, right? They recently had their peaks. And as you can see, they've recently been having a hard time. Makes sense in the face of a strong dollar, right? Gold is trying to produce a similar situation here. It doesn't have the failed high in there just yet. It's trying to produce a lower high. Again, bearish. I would be looking for shorts on gold, all right, as a swing trade. Now, people are like, oh, you're going to short gold? we're still in the environment of a strong dollar. When the dollar changes and the Fed says something like, we've overdone the anti-inflationary thing, we're going to cut rates, or we're not going to raise anymore, then you will see the dollar break supports, and then you will see these metals start to get some momentum on the long side because they are inflation hedges, right? The Fed is fighting inflation. Again, don't have opinions, just go by the price action. Because people come in here and they tell me, well, real inflation rate is 15%, and gold has to go higher. It's just a nonsense opinion. Okay, no one knows the real inflation rate is. The market goes on the perception of, is Fed taking action? Yes. So the real inflation rate, even if it's 20%, is going to be lower soon because the rates are rising, right? Now, the key thing with inflation, I think, is oil, because oil refuses to pull back. Obviously, there's geopolitical tensions behind that. But if oil breaks and goes to 120, 130 or something like that, that's inflation, right? So how is the Fed going to react to that? Is the Fed going to raise rates further because we have to keep oil under control? Or are they going to find another way to keep oil in check? Because what are we going to have? $10 a gallon gas in this country? And forget this country, other countries have ridiculous numbers that they have to deal with. That's a form of inflation. And oil, let's take a quick look at that, right? USD, WTI. Oil is not going lower right now. Look at that. It's trying to break out higher. That's inflation. And that's with rates still rising and the dollar generally strong, right? Generally. But the dollar pullback, this move makes sense. But I'm not going to apply logic to these situations. All I know is if oil continues on this route, the question is, I don't know what the Fed is going to do. My question is, what are they going to do? And that is an answer that the market can react to in a number of ways. And you need to be prepared to adjust to how the market reacts to that information. Maybe the market is expecting the Fed to take some action, but not too much action, right? If that's the case, and the Fed is more dovish than anticipated, the market can rally. And that doesn't make sense because, the Fed is still raising rates and I thought the market's supposed to pull back. It's all relative, right? So is it too much? Are they too dovish? Are they too hawkish? Are they not as hawkish as they thought? That's like with a company report. Company report comes out really good, but not as good as everyone expected, but it's still really good. Stock sells off because it wasn't good enough relative to the expectations. Does that make sense? Okay, it's a good question. Man, I'm talking too much. Let's move along here. So that's palladium. Barack, it's good to see you. All right, he's a student of mine. Freeloader, hey, good to see you. Okay, Steve, hey, how are you? Tesla long. All right, so let's take a look. TSLA. Now, here's the thing. Tesla is basically, it's a component of the S&P, right? It's a market stock. So it's going to move with the market, right? I mean, that's a pretty significant jump, recent jump there. No, I would not go long because, again, when you're going to talk about something like that, the first thing you should take a look at is this, right? Stocks don't trade in isolation. Look at this first. This is the S&P, right? What a move on the S&P. Like I said before, bear market rallies can be very irrational and very erratic and not make sense. Sure, we took out this lower high. People are going to say, oh, the bottom is in. The trend is now bullish. Not necessarily, because the environment hasn't changed yet. All right. Again, we looked at the dollar, but again, another factor, look at the bonds. Does that look bullish to you? Not really. I mean, we can pick on it and be like, well, it's a higher low, and then it's a higher high, right? Like Seinfeld would say, George, we have a higher high. We should be long. But no, you shouldn't be long, Jerry, because you're at a resistance level. Oh, no, I didn't see that. So that's I know I don't really sound like him, but that's just my really bad impression. I hope it makes some of you laugh. This is the bond market. That's a resistance. We rolled off the resistance. This has not changed. This can still be arguably a bearish trend. If this is the case and the bonds make a lower low, then rates are still rising. So what does this all have to do with Tesla? If that's the case, this move isn't going very far. So to answer your question, is Tesla a long? No, it's not a long. Okay. I mean, day trade, I'm not talking about day trades. If you're talking about investing, well, if you're talking about investing, you shouldn't invest timing wise, like looking at a chart and say, okay, this is where I want to invest. Investing is more of a scheduling and sizing thing. Okay, we're talking about dollar cost averaging, right? You pick one day a month, and that's when you're going to make your investment. It doesn't matter what the price is. Clearly, Tesla is not at highs, right? So you're getting better prices than the recent highs, but this is potentially a lower high, especially since you have this old support here, which is likely to act as a resistance. Same with the S&P. All right. So this is not a place for longs. Again, if you're dollar cost averaging, it doesn't matter where you buy it in here, because if it pulls back, you're going to buy more anyway at the small rate that you're buying at, or the small size. And if it makes the lower low, you're going to get better prices anyway. Keep in mind, the NASDAQ and the S&P still have a lot of potential on the bear side, and a market that's not supporting them, right? This is the S&P again. If S&P fails around 4,200, which we're fooling around right now, we can see that test again of this low. What is that? The 3,900, 3,950 area. We can see that test, and it can come quickly out of some catalyst that comes out of nowhere, right? You don't want to buy resistance levels in a bear market. This is right now, this is a potential resistance level. What's it going to take for this thing to prove otherwise? Well, for one, we need to see the bonds turn bullish. They haven't turned yet. We need to see a higher low develop in the S&P and then break the resistance, break its whatever resistance it establishes here, needs to clear it after the higher low is in. We can argue that we have that here, failed low, but the environment hasn't changed. Maybe the market is ahead of the macro fundamentals. It's possible, but I want to see the next higher low. I want to see more evidence of that, because I don't see it. Okay. And that is going to start with the bond market. All right. So anyway, good question on Tesla. Needful. I have been in a NASDAQ short. Okay. What are the levels you are watching this week? Is it a higher probability? Okay. So S&P and NASDAQ are the same thing. Good question, because I'm on that subject anyway. Short the NASDAQ. You're short. You may have shorted the bottom of that move, right? That's a very hard short. That's why in these situations, right, you have to understand your risk and the possibilities. Like before this move, let's just erase this move for a moment. Let's just say it was before this move. If you asked me at this time, is the NASDAQ short? I would say, sure, it's a short. I see lower highs, and I would be expecting this level of support to break, but it doesn't break. Got bullish pin bar, right? Then there was some good company reports, blah, blah, blah. And then we have this rally in your face. Now, that's a risk that you take even in a bear market. I mean, look at this. This move, look at this move over here, okay? Look at this move. That's a bear market rally. And that was a pretty convincing rally, and it gave it back anyway. So to answer your question, as far as resistance, we've sort of taken out this lower high here, right? I mean, we've taken it out, but do we turn and give it back over the next few days? That's what you have to watch out for. We have NFP. Now, with NFP coming, I'm not expecting anything spectacular, but that's one thing you want to look out for, is the swift reversal, right? Which would be a failed high on the NASDAQ, which is, what is this thing right now? This is, you have an old support right in here. I mean, look where it is. This entire area is a high probability area to go short. If you were looking to short the NASDAQ, this is what you wait for, not the lows. Now, it doesn't mean you shouldn't short an aggressive sell signal. You just have to be prepared. If it's aggressive, you have to be prepared to adjust quickly if it does something like this to you, right? Like if I was short that, I know it's easy to say after the fact, but most likely I would be out, because it took out this resistance here. Most likely my stop would have been somewhere based on this resistance, this little minor one, if it was a swing trade. Okay, certainly don't want to be short, and this is a lot of risk that you face. So with that being said, if you were flat and looking to get short, this is what you wait for. Now, it doesn't guarantee we'll get the reversal. What if we get another bullish candle for whatever reason, right? Some news comes out and you see something like that, right? It works its way higher. Well, the next resistance is here. Okay, so what price is that? 13.5 area. So that's the next area to be looking for shorts. And that at that point, that would be an aggressive short, because the market really shouldn't go that far if it's going to stay relatively bearish. That would be surprising, a little surprising. So That would be an aggressive short to see if it gives the move back, or if you're not willing to take that aggressive short at that level, you wait for the pullback and look for the long. Because at that point, if it can do all that after clearing this resistance here, then we probably have some sort of change going on. Again, I would also be looking for some similarities in the macro fundamentals. I know I cannot trade this in isolation, unless you're a day trader, which is another story, okay? But we're talking about swing trades here. You do have to keep an eye, especially with the NASDAQ and the S&P. You have to keep an eye on the macro drivers like the bond market. And we saw the bond market was turning. So that's not a bullish sign for these things, right? So if you're in it, you have to give it a chance. Or if you can take the risk, if you can hold on and watch this thing rally another couple of hundred points before it turns, it's possible. I hope that answers your question. I know I jumped around all over the place, but if I was flat, okay, I mean, I'm not short the NASDAQ. If I'm flat, I would be looking to short this if I got the signal, okay? Hope that helps. Let me jump over to the other chat here. Okay, Peter, when the market, okay, altcoin, you can see more news coming out as well. Well, yeah, true, Peter, because why? The news that you're seeing a lot of times, whether it's from a blog or a fake guru or whatever, they act as an amplifier. At one time, we only had two sources of news. Okay, there were only two channels that you can go to for financial news. Okay, today you have thousands and thousands of places you can turn. Fake gurus, you have the traditional news channels, you have all kinds of blogs and all kinds of nonsense. These entities, if you want to call them that, act as amplifiers. So they're going to just tell you more of what's obvious, and that stimulates more activity. So just keep that in mind. Never make judgments on that information. It's completely worthless. It's only entertainment. You have to look at it that way. It's like watching a cartoon and expecting to make money. Okay, Julio, can you please have a look at oil? Okay, so I took a quick look at oil. I mean, we can take a look at it again. USD, WTI. Oil is strong. It's been strong. I've been talking about oil. Certainly wouldn't short oil. Oil is in the process of this breakout. Now, with dollar trying to rally, I don't know. Oil has been ignoring anything that the dollar does. Oil is just being oil. You can have that, I guess, when you have geopolitical pressures acting on this thing, and it's not just the dollar alone, right? So with that being said, you can't argue with this. I wouldn't short it. If anything, you wait for a pullback for a long. There have been plenty of pullbacks, okay? So it's just a matter of waiting for another one, looking for an old support. You have one right there. What is that? 108. Oil right now is at, what is this thing at? 117. So if this thing pulls back to 108, 110, 108 area, that may give you a new buying opportunity in this area here if it can hold it in reverse. That's that's something worth trying out because oil is generally strong until something changes. Now, if oil goes back to those supports, 110, 108, and clears them, like that's not even there, right? Just blows right through. And you see oil at 100, that's when you have to step aside. Don't step in front of oil because if there's some fundamental that changes, whatever, something with Russia, whatever, right? We don't know what that is. You may get caught in something that is unexpected, and oil may work its way back to 95. There's a lot of people that would like to see a short oil. Okay, so just something to keep in mind. Oil is a very sensitive, a geopolitical sensitive instrument. Definitely want to focus on the momentum and no opinions. This momentum is clearly bullish, but you don't want to buy the high. Look for a support level. Okay, that's the more conservative thing to do. Thank you for asking. Hey, Marco, good to see you. Okay, no problem. Mr. Plow, I like your articles and always read them. I like the long version. No, Mr. Plow, I understand. I had a conversation with a few people that gave me some very valuable feedback about, my articles. And there were a lot of people that liked the long version, but yeah, I can't spend that kind of time. I mean, you look at my numbers, they're just like, man, and I have like a decent following on TradingView. And it could be the holiday. Like I said, it could be a few things, but it's just more time efficient for me to just write something in 45 minutes, which would be like 10 lines and get it published, than spend, I have to spend 3 hours to get no viewers at all. All right. So anyway, thank you for your comment though. Hey, Travel, good to see you. Rhino, I just wanted to thank you for providing a realistic point of view in a space filled with hypesters. Oh, can I put this? I got to show that. Look at this, what this guy says. Just wanted to thank you for providing a realistic point of view in a space filled with hypesters and fake experts. I took profits heavily a few months ago. Oh, that's really nice of you to say, Rhino. At least someone sees what I'm talking about here. The fake-a-roo problem is a serious problem for retail traders, not the industry. Because you sit there, why would the industry? They're great for the industry. They stimulate activity. They stimulate more fees for brokers and exchanges, and you can pay a fake guru to push your altcoin. They're great for the industry, right? So the only way something is going to be done about them is if you, the retail trader, you do something about them. Basically complain, stop watching them, stop at the demand. But I could sit here and say this, it doesn't matter what I say. There's demand for hope, there's demand for dreams. That is what they push on you, and they're very good at it. Fake guru, fake gurus, they may know nothing about markets, but they know a lot about marketing. And that's what I'm trying to learn, marketing skills from fake gurus, because, I'm a horrible marketer. You could see with my numbers. So, yeah, I'm not going to be unethical like a lot of them or most of them. I'm not going to sit here and lie, which is what most of them do. And I mean, that's an effective technique for marketing, lying. But the point is, they're very good at marketing and pushing their high frequency of content out, because it doesn't matter what they say. What matters is they're pushing hope on people, right? And that's what people want. Like I said before, people don't really want to make money. They want the dream of making money, and they're willing to pay a lot of money. That dream is worth a lot of money to the people selling the dream, okay? But to you, it's not worth anything, but you're still willing to pay $1,000 for it. All right. Can you please look at PFC stock on the monthly chart? Okay, monthly chart. Let's take a look. PFC. Okay, let's take a look. And he wants to see the monthly. Monthly. Why the monthly? Let's take a look. So right off the bat, what do I see here? What a range. Nice clear range, right? That's a long-term consolidation, right? Midterm, you can argue that the going back a few months, maybe back a year, you're looking at a bullish trend, right? And short term on this chart is sort of mixed or bearish. So what you have to look at in this type of situation is your general location, right? Are you near the range high? No. Are you near the range low? No. So that's important information right there. Are you near a minor support? Yes, you are. The monthly low, 104.25, is a minor support. Now keep in mind, it's right in the middle of this gigantic range. Look, just going back years, right? Look at this. Going back all these years, look at that. So you're in the middle of that range. On the short term for swing trades, you may get something out of that, right? If you're thinking short term oriented. But long term, I mean, this thing, it's possible that this thing can revisit those range lows. So these are the current levels are not attractive for long term or investing, right? Current levels may be more attractive for swing trades. So here's the daily chart. Obviously, we can see now in the context of that monthly chart that this level, right, that 104 level is a significant level. So what do you do now? I mean, this thing's trying to break out. Looks like it put in that bottom and it's trying to break out. Keep in mind, it's a stock and it's going to do what the stock market generally does. I don't know what they do exactly. I mean, Power Finance Corp, I'm guessing it's a financial. So the S&P, a significant component of the S&P are the financials. So you can't buy this because this is just a bear market breakout, right? Your chances of failing are pretty high here. So what do? Even if it runs a little further without you, forget it. Look, if you're interested in buying this thing as a swing trade, best to wait for supports, okay? The S&P is likely to pull back. Where is this thing going to pull back to when the S&P pulls back? That's what you want to watch for. Your key level right now is 104. If you can get a reversal somewhere around 104 or slightly higher, maybe you have a swing trade opportunity. But I would not go into this with any high expectations, all right? Like Rhino was saying before, he sold all this stuff months ago. You know what? If you go back to my videos months ago, I was warning people all over the place. These markets are highly vulnerable. Take profits, lock in something, blah, 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 blah. Don't be investing at these levels. I was warning people. Not too many people listened to me, but Rhino listened. Anyway, so I hope that helps you with PFC. It's an interesting stock, but use the S&P as your guide. this would be a vulnerable place. Wait for support if you're going to do anything with it. And again, I'm speaking from the swing trade perspective. These are not exactly investment grade levels. Maybe you want to wait for lower prices, or like I said, when it comes to investing, it's not really about timing the chart. It's more about sizing and how much, how much you're going to allocate each period that you're going to make a purchase. For example, you have $10,000, you want to buy $1,000 a month. That means 10 months. Over 10 months, you're going to accumulate an average price. If the market is lower in 10 months, you'll be buying at lower and lower prices, right? If the market is basically range bound, you're going to have an average price probably somewhere in the middle of that range, but there's no way to know. And you can't really time your investments that way. When it comes to investing, I like to look at the macro, and based on the bond market, if in terms of investing, I would either not invest at all, which is what I'm doing. I'm not investing, not until I see the bond market do something meaningful, or invest small. There's nothing wrong with investing small, all right, if you have no problem with that risk. All right, Isaac, okay, is not notifying me anymore of your articles. I don't know, is it me? Isaac, thank you for mentioning that. I don't know. That could be a TradingView thing. I don't really hear that very often. I mean, I'm publishing it normally like I normally do. I haven't changed any settings on my side. So maybe it has something to do with TradingView. Maybe they don't like me anymore. I don't know. But thank you for mentioning that. Maybe you want to ask them. I'm not sure what the problem is there. Thank you for bringing that to my attention. All right, Gupta, so that was for you. Bart, hey, Bart, can you take a look at 12-1-1? Okay, Hong Kong stocks. So I think you've asked me about this before. Let's see, hold on. Let's see, 12-1-1. Let's take a look, okay, BYD. All right, this is Hong Kong stock. Let's take a look at, this is the daily chart. Let's take a quick look at the weekly chart again. So again, look at this, what a move over the recent few weeks. You can't buy this now, man. I mean, if you're long and you bought it at a lower price, these are great prices to take profits for sure. Again, profits, you have to look at them in terms of the risk that you've taken. If you're in this, I don't know if you're in this, but as far as taking a new position, no way. Too much risk up here. Look at these tails going back, back to the beginning of the year and going back further. There's too much resistance up in here. So it's highly vulnerable. Not a place for new longs. It's a place to reduce risk. Even though, yeah, you have the higher low and all that stuff, no way. Okay. So in terms of reward risk or better risk, look at the old resistance, 244. I guess these are in Hong Kong dollars. Yeah. So 244, right, would be an old resistance. Right? And then you have this area right here, which is what? 203, which is just above the whole number, 200. So that would be your zone for potential long for a swing trade. Now, I'm guessing again that this thing is just reacting to that S&P. You have to watch how this thing behaves if the S&P has a sharp pullback, or a test of its lows. This is in potential failed high area. You see that? Potential failed high zone. So definitely a bad place for new longs. That type of thing sucks in a lot of, Robinhood traders. Hey, look, the breakout, right? And it doesn't go very far, right? Especially, again, we're not in a bull market. So breakouts are going to be especially hard in this environment. Wait for support. That's all I can tell you on that one. Thank you for asking. Okay, let me jump over here. So that was Bart. Mary. Hi, Mary. I really appreciate your articles. It's a shame that other people do not want to read. Well, Mary, again, see, I get a mixed review. Some people say they like the longer articles. Some people say they prefer the short ones. I can only go by the population numbers, right? And when I see a fake guru write 5 lines and get 5,000 or 10,000 views or whatever and 10,000 likes on 5 lines of nonsense information, and I spend 3 hours writing and I get 1,500 views, I'm doing something wrong, as far as what I'm doing or how I'm presenting it. So anyway, okay, I think it's the holiday on your article. Okay, I appreciate that. I mean, again, it could be a number of factors. My point is, because I can't blame it on any one factor. I can't go by just one instance. I'd have to look at the performance over 100 articles, right? That kind of thing. But I still put in the time, and if I have to put in the time and hope to get, I'd rather write 5 lines, and then at least if I get like no views, at least I could have put that time into something more important. You have to understand, I have a lot of things that I have to do. I'm not talking about like hanging out and, going to the beach. I'm talking about work. I have work to do and more important tasks like marketing and stuff. And I never get to them because I spend 3 hours writing an article that no one wants to read. All right, so free. If it makes any, I wait every Sunday, refreshing the page like 10 times an hour. Oh, yeah, and there's, okay, but no, it's really appreciated. If not, the few that are learning, okay, I appreciate that. See, I get some nice feedback. Thank you. I usually try to get that thing out in the afternoon sometime, Eastern time. So I sometimes if I can get it out earlier, I can. It's tough to say. I can't put an exact time on it, but thank you for mentioning it. It's very nice of you. Need. Can you explain again how you look at the 10-year bond? Is it to determine, okay, right, so the 10-year note futures, okay? ZN1, these are the futures. So it's the 10-year note bond futures, okay? Again, I'm looking at this as a reflection of interest rates. So we know that the price is inverse to the rates. I can look at a yield chart, and the yield chart will be inverse of this, right? So if I know prices are going lower, yields are going higher. Yields are interest rates. So I'm using this as my macro view. And I've used this all throughout, like going back to previous August. This thing warned me that the market was in trouble. Now, keep in mind, the market rallied to new high after new high after new high going into December. The bond market was giving warnings in August. So just keep that in mind. It's not a one-to-one thing, right? I knew that going into that, I knew that the new highs on the S&P and the NASDAQ, I knew it was hot air. I was telling people. I wasn't keeping it a secret, but no one was interested. Everyone, where should I buy Apple? Hey, Apple is going to go to 10,000, just like my favorite altcoin, right? That's all people are interested in. But I knew those highs were vulnerable with the bond market doing what it was doing. And then what? Chairman Powell comes out in December and says, I'm done supporting this market. I made a mistake and I'm going to raise rates, basically, right? That was part one. Part two, we get in February, Russia, they do their things. And now the market's bearish out of nowhere. It wasn't out of nowhere. Okay. Now rates are rising. The Fed is behind rising rates. So you understand how that all came together? So as far as looking for the reversal, right, or going back into a more bullish market or supportive market, the bonds need to stop making lows. It's possible that we have that in, but the bonds take a very long time to show us anything, right? They take weeks or months. Like I said, I spotted the changes in August, but the market was not interested until January. Okay, that's when we started to see the effect in the stock market. So the bond market, if we test these lows right here and we break them, then I know nothing has changed. I know that the stock market is probably going to pull back and push lows again, okay? And it's not the time to invest. I will judge this chart here as a healthier time when we break resistance. I mean, clearly break this resistance, show more of a bullish trend, and I need to see the Fed, right, start changing their talk, okay? Now, it's possible that the bond market will ignore Fed talk and the bond market will just start pricing things in advance because the bond market is usually full of smart money. Okay, which is what was the case. The Fed wasn't saying anything back in August, right? The Fed started talking in December, and the bond market was still pricing in rising rates. So we'll see that thing pricing in earlier, probably before we start to see confirmations from things like the Fed. So to answer your question, that's how I'm using the bond market. And right now, this is still arguably bearish, which means I anticipate a test of low at least. If we test the low and don't break the low, and we hold that low and we're going to consolidate, then maybe we have a bottom of the bond market, maybe. That doesn't mean we're going to have a reversal in the stock market. It just means maybe rates will be stuck at whatever, 3.5%, whatever that number is. And then we'll see how things go. It would be an opportunity for the market to stabilize over some time. I will keep that in mind. But if the bonds continue to push lows, that's not bull market action. Does that make sense? Eventually, the bond market will break resistances and show us a bullish look. When it can do that, because this isn't bullish, when it can do that, then I will expect things to start to follow, right? I would expect the Fed to eventually start changing its mind, and we should see other signs, okay, to support that break in the bond market. Does that make sense? All right, so I hope that answers your question. I know it was a long talk, but that's an important talk. People, you need to understand the macro view, and it begins with the bonds. Okay. What do you think of Hex and its future? Hex, I don't know what that is. Is that an altcoin? Let's see. Let's see. Let me type USD after it. I guess it is. Well, as far as Hex and its future, I have no opinions. Okay, I guess this is what you're talking about. I have no opinions. Altcoins are speculative, and until we see speculative money return to the market, all of these coins are in the toilet. All right, most of them are off their highs by 70%. Some of them 90%. They're garbage, and they only make developers rich. That's what I think of all altcoins. Okay, it's not a leader. It's just some, I don't care what their white paper says. I don't care, blah, blah, blah. It's all nonsense. I have no opinion. So this market will change and Hex will change too when speculative money comes back. Now keep something in mind about the next run in altcoins, because, you know, again, these things aren't all going to go to zero. Some of them will be around, but keep something in mind. I got to bring up an important example. Back in 2017, we had the original Bitcoin rally to 20K, right? And there were certain big name altcoins at that time. They're promising blah, blah, blah. The next Bitcoin, this one is going to replace Ethereum, blah, 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 right? All that nonsense. Well, Bitcoin then pulled back to 3,000, okay? And all these altcoins suffered and blah, blah, blah. And then we had the second run where everyone was making billions of dollars, right? Because they all bought VeChain at, you know, sub penny, and now it's $50 a coin and blah, 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 right? We had that run. All the original big names from the first run, most of them were like forgotten about. Coins like IOTA and all these other magical coins, okay, stellar lumens, they were all forgotten about. Yeah, they moved, they worked, but there was nothing, they were not the spectacular magic rally that everyone thought, oh yeah, this is going to be the big one on the next run. No, all new names came about and all new coins basically took the attention, right? And you know, you had things like, you know, Solana and Cardano and all those other nonsense coins that basically took the attention. Okay, Theta and Anchor and Dot and Polka and Link, Polka, Link, right? All those nonsense coins. Now, I would expect in the next run, new coins will come out and basically be the ones, right? If this coin, I guess, is somewhat relatively new. Has this coin been about this year? Okay, so maybe this coin will be one of those. I don't know, but there's no way to know in advance. All right, so I hope that helps. Again, it's having that macro view and understanding if the environment is ripe for these things. And I would expect a new host of names to be on the forefront, not the names from the previous run. That's just the way it goes. All right. People are sold on stories. So if marketing teams can come out with better stories for these other coins, they'll say, oh, screw Cardano. I bought that stupid thing at $2 and now it's 50 cents. I'm going to buy this new coin because this new coin, whatever the name is, has potential to run to 1,000. I'm buying that one. All right. So keep that in mind. There's something else I want to say about advertising, but I'll say that in a minute. All right. So that's Hex. Thank you for asking. Let me see. So I'm going to wrap this up here momentarily. I got a few more minutes. I do want to say something about advertising. Let me see if I can answer some more questions first. Would you expect Bitcoin to hit 32K by tomorrow? I have no idea. Again, would I expect it? Let's see. Let's take a look here. Let me go back to Bitcoin. What happened to my, hold on here. Okay, let me go back to Bitcoin. So would I expect it to go to 32K? I mean, look, we have bullish momentum at the moment. I'd have to look at smaller time frames to really answer that question. I mean, let's take a look. Let's take a quick look. Let's look at a 12-hour chart. Okay. I mean, look, there's no sell signal in here yet, but you have all this resistance. 32K is the bottom of the resistance zone. So it's possible by tomorrow, you know, is the S&P going to rally? Is the S&P was like a little weak today, I noticed. It doesn't really mean anything. There's no volume, but it's hard to say. I have no idea. You know, I mean, at this moment, I would say that it's on its way there at this moment because I don't see a sell signal, but I see resistance zones. Okay, let's take quickly a 4-hour. Does a 4-hour tell us anything? I see consolidation at a resistance zone, right? So it has some room to go higher. All you can do is hope for the best there, right? Because there's no way to know if it's going to get to 32K. Momentum is in your favor right now, but if it turns, the key thing to answer that question is you have to see if the market gives you a turn between now and tomorrow. You know, do you get a 4-hour sell signal? You shouldn't. If it's going to go to 32K, I mean, this thing right now is at 30,750, right? So another 1,500 points, you really shouldn't see a sell signal. You should see long continuation signals on smaller time frames, not a big fat sell signal on a 4-hour chart or a larger time frame. Does that make sense? So that's really what you should be looking for. All right, so I hope that answers your question. Let me see what else we got here. All right, so from Brussels, hey, welcome. I not set a stop on a trade. I entered at 35,000 a week ago. When to exit this one? I exited 1/3 at 30, but still too big. Okay, stuck as you've mentioned numerous times. All right, so you have to respect risk. Right? That goes back to what I was saying before, respecting risk and having your rules and having your plan. So you're stuck. You're in from 35,000, and you blew out 1/3 of it at 37. So in this situation, right, you're at the mercy of the market. You have to hope that this thing can clear this minor resistance right here at, what is that, 31.4? This is your minor resistance that you're dealing with. You have to clear that first. If you can clear it with no sell signal, then 32,000, between 32 and 34 is your next zone. So perhaps price will probe it, and you have to watch how price behaves in there. If it gives you a sell signal beforehand, here's the mistake to avoid. If this thing runs to like 33,000 or something like that, which is possible, and then gives you a sell signal, and if you have to bang it out, it's now at 32.5. Don't say to yourself, "Well, I'll wait till it goes back to 33, then I'll get out." Don't do that. It's a bad idea, because if it rejects anywhere between 32 and 34, you can get some very swift momentum to the bear side. Why? Because the broader structure is bearish. So there's a lot of bears just waiting to get on this thing, right? That's what the structure supports. So keep that in mind, okay? Now, can this thing break above 34,000? It can. That's a possibility. The key is not to know if it's going to. It's giving it the chance and interpreting any new signals along the way. You may get a sell signal. Maybe you get out of another third, or let's just say, for example, right? I'm not giving you trade advice, but let's just say you get the sell signal at 33. You bang out another third at 32.5, right? So now you've taken a loss, but it's less of a loss, but you still have 1/3. And you say, well, let's see where this one, maybe it'll hold 30K again. And now you give the market a chance. Again, you're taking a risk. You're taking a chance that this thing is going to find support somewhere and generate another buy signal along the way. Okay, but you're going against the bigger picture. So probability does not favor your hope. Does that make sense? So that's why, I always tell people, focus on risk. Theoretically, it's better to take the losses. If you can get a reduced loss, that's great. Even if it does go back to break even, you can't be mad at that, because it's the risk that you've taken. Okay, so understand that it's a hard game to play when you're trying to make money back and you take these losses and then it goes back to break even. If I just held it. But also, after the fact, it's easy to say, what if this thing went to 20K, right? What if you got out about 33K and then the thing went to 20K? You would be very happy that you got out, right? So you have to look at that side, not what you could have made or what you could have lost. That's greed, and that's an emotional problem, okay? Or I should say an emotional hurdle that the retail trader must regularly contend with. It takes a long time to get control of that and be aware of it. Anyway, I hope that answers your question. All right, but I understand your situation. Okay, Steve, I read today that EV vehicle production is in full swing, but the EV charging stations are stalled. Okay, okay. In order to proceed, okay. I don't know again, but now you're talking like opinions and stories, right? People love stories, and this is what you're talking about there. Like if I was like a content, if I was a fake guru just pushing out stories, that would be a good story for me to get into, right? EV charging stations and the potential of the future and blah, 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 right? People like that. They like to bet on nonsense stories. What you're talking about there is completely irrelevant, right? It's completely irrelevant to price momentum. That's why I tell people, focus on price momentum. But anyway, thank you for mentioning that. All right. Don't use logic in an arena where prices are driven by irrational behavior. Understand that is the underlying force behind prices, not logic. You say, oh, but I bought this thing on this news and it worked. Randomly, it will work. Okay, but random doesn't help you in the long run. All right, no problem. Okay, Steve. Alex, I was again. Okay, no problem. Okay. Oh, he's going somewhere. Okay, cool. Just got back from London. Oh, you should have said Alex, you should have said hello to Will and all my Londoners here. I got quite a following in London now. I'm going to have to start talking with a British accent. Here, dear. I'm joking. I'm joking. I love British people. Okay. I don't drink tea. I drink iced tea. I don't think that counts. Can you comment a little on hidden BTC strength? Okay, that's a good question. And it's significant it is. Is it less likely 20? Okay, where is it coming from and how reliable is it? All right, so Freeloader asked about the hidden strength. I wrote about this because again, I was talking about price interpretation, right? Price interpretation. Let's talk about this. And I was talking about the fact that we refused to break 28K. Theoretically, right, if momentum is bearish, lower high should lead to lower low, but it fails to make the lower low a number of times. That can be interpreted. I mean, something that's weak should make a lower low. So if the market does not produce the lower low, what does that tell us? That means there's no one selling, right? So that could be hidden strength. The oscillator is not going to tell you that. You have to interpret that from the price action itself. The lower low should be there. There's no lower low. That means something, right? But you have to look at that in light of the bigger picture. You can't look at that in isolation because you can get those situations where there's temporary hidden strength like this, but then the bigger picture reasserts itself. So in these situations, if you're going to use something like that, you know, like the hidden strength, that's good for day trades. That's good for smaller time frame if you're against the bigger picture. Buying this thing is against the bigger picture right now. So I wouldn't put a whole lot of weight. That's why I said there may be hidden strength, but you know, it's like flipping a coin. It's going to be 50-50 if it follows through or not. I would rather, if I'm going to bet, I'd rather bet on the side of the bigger picture because that's where all the real momentum is, right? So again, the bigger picture is still bearish. So that's why I say, you know, there may be hidden strength that can prompt you to perhaps cover a short like that short that I talked about. I talked about some options. Get out, take the loss. That was one of the options. Get out, take a small loss or around break even. Right? And when I wrote that article, Bitcoin was still fooling around 29.2, which was the entry price. Okay. So that was a choice that you could have made. And you could have used the hidden strength idea. Well, you know, this thing should have made lows and it's not. That's a piece of information that you could use. I should probably get out because I'm not willing to take that chance that this thing is going to squeeze. That's up to you. Okay, if you're not willing to take that chance, you may say, oh, I'm willing to take the chance. Okay, well, now you're exposed to this. You were willing to take the chance. The market's not going to tell you that. Chart is not going to tell you that part. You have to decide yourself if that's something you want to deal with, right? But the hidden strength could have at least cued you, right? Market should be lower. Market's not lower. That may mean something, but it doesn't mean we're going to see this magical bull market, right? Just keep that in mind. Understand the expectations. So again, that's how I'd use something like that on smaller time frames because the bigger picture is bearish, not bullish. Does that make sense? Okay. So I know that there's, I mean, I can talk about some of these, like that kind of question. I can talk about that for hours and, you know, I can't do that here. So I hope I can give it enough information for at least for you to come away with something valuable. All right, let me see what else we got here. I get the notifications on, okay, Will, I don't get the notification on notifications anymore. I get the streaming notifications, but not the articles. That's strange. Yeah, maybe that's a TradingView thing. Maybe they don't like me. You know, I don't know. I mean, maybe I'm breaking house rules somehow, and no one's telling me about it. Okay, I don't know. Ludus, hey Ludus, you check euro. Okay, so euro. I talked about the dollar before, right? And I'm interested in the euro short. Now look at this. This is basically inverse of the dollar index, right? And I'm talking of euro short. Look at this. Now, in my I talked about this to a few people over the previous week. I said we have a potential continuation long pattern developing after a short setup, right? And that was this was the short setup right here. And I saw, first of all, when you get the setup at a resistance level, which is what we had, okay, in this area, I was thinking about euro short. Then I saw this candle develop. That's definitely not a short signal when it gets negated like that. Bearish momentum should be swift. I shouldn't see a green inside bar after a bearish signal. And I looked at the dollar index. I saw the dollar index was on its way lower. I said, okay, this thing is probably going to give us a bullish reversal, right? And so you can quote my words. I said, where it goes, though, is random. So we have this little extra movement here. How far is this thing going to go? We're still in the resistance area. It can be a failed high. Now, as we saw, the dollar is trying to turn around. So we have to see how this goes. I mean, we have NFP this week, which can affect the dollar significantly. Maybe this thing turns. So we are an area of resistance. I would not be looking for longs here. I would be open to shorts, but there's no sell signal. So do we get a bearish inside bar? Do we get a bearish engulfing candle, right, off of this resistance? That would be much more compelling for a swing trade short. Also, I'd want to see the similar situation going on in the dollar, which should be inverse. Does that make sense? So this is not bullish. I'm not bullish on this at all. I'm still bearish on this. And that's why I never called that long, because I think it's low potential. Does that make sense in light of the bigger picture? So thank you for asking about euro. All right, let me just jump over here. Let me see if I can answer some more questions before I wrap this up. We go over BTC yet? This seems to be looking like exit liquidity. Okay. Yeah, so I answered that question, Toast. Again, but you be careful with those opinions. You know, move to 24 incoming, maybe, right? But it's you can't. It's too early. There's nothing on the chart that says we have bearish momentum at the moment. So don't have any opinions. I'm generally bearish because of the structure, but I'm open to change. If we change the structure, then I'll start getting bullish again. But right now, I'm open to the idea that we find a failure somewhere between 32 and 34 and a new sell signal. That's what I'm anticipating. I could be wrong, but that's the setup I'm looking for over the following week, especially with things like NFP. It's just, you know, just coming up. I don't like to read, but I like your videos. Okay, a lot of people don't like to read. Aren't markets rate hikes are, well, yes, empathetic. When we were in this horizontal support, you weren't this bearish, right? I wasn't. I was bullish because rates are upcoming. Rates are no. Here's the thing: rates are priced in, right? And the June meeting that the Fed is coming up with is priced in. It's what he says at the press conference that may not be priced in. So we have to see. All right, we have to see if what's the Fed going to do about oil, like I was saying before. I was bullish on Bitcoin a year ago because the structure was bullish, but the structure changed, right? So I'm bearish now because the structure is bearish. Now we'll go back to Bitcoin. I go by the structure. I don't go by opinions, okay? So if we go back to a year ago, I mean, let's go back a year ago. What was going on a year ago? That was before we touched 69K, right? So of course I was bullish over here. Okay, I mean, of course we could see after the fact, but back at this time, there was no reason to be bearish. We were at supports, and we were basically correcting a bullish structure at that time. Since then, we've developed a bearish structure. So I go with the structure. Does that make sense? Anyway, thank you for mentioning. All right. Every Sunday, I refresh the page. I appreciate that. So see, I got people reading the article. I appreciate that. Thank you. All right. Okay. YS, still looking to short gold. Like I said before, I'm open to it if we get the signal. Gold, euro, that's all going to be the dollar. Basically, shorting gold is going to be going along the dollar. It's the same idea, right? And I like the dollar potentially setting up for a long. So we have to see. But I mean, that palladium chart looked much more compelling than gold, shorting gold. Euro may be a better choice. Okay, I don't know. We have to see. Maybe the charts will give a more compelling confirmation, and maybe I would choose gold. We have to see how it goes. But I am leaning on that side. Okay, could you please check euro? Oh, okay, sure. The South African rand. Let's see. So this is the South African rand. Not too many people ask me about this one. I mean, look, you're range bound on this, right? Look at this. Range high coming off range high, right? It looks like it's following the dollar. Looks like that, right? The US dollar. I mean, well, what is this? This is a dollar against the rand. All right, so it is a dollar is the base. That makes sense. So I'd be looking for longs here because looking for longs on the dollar, right? Thing is, there's no signal to go long. So we have to find the supports, right? You have an old resistance here. Actually, let's start a little bit lower. You have an old resistance here, and you have an old resistance. Well, actually, you have a support right there. You have an old resistance here. So you're in a support area, okay? And there's no long signal yet. But if you get the long signal, I would be open for the long, right? Just like looking for along the dollar. It's the dollar, and the rand is getting weaker against it. So that's what we'd be looking for. All right. Again, there's no buy signal here. What will a buy signal look like? Inside bar, okay? A large green, like a bullish, like engulfing candle would also be a buy signal. a bullish pin bar that develops would be another buy signal. You're in the location, and it's willing. What's going on here? Okay, it's okay to give it a try. Hold on, there we go. My screen, my computer's acting weird. What's going on? Let me refresh that. Okay. Sorry about that. Let me see here. All right, so that was that one. Okay, Bitcoin to 100K. Always joking. Right. Okay. Cool. YS. Thank you. Hey Scott, good to see you. Can you look at AAVE? Let's take a look. All right, I'm gonna wrap it up after this one. Let's take a look here. AAVE market cap. Oh, okay. This is one of those market cap trackers or indices. This is interesting. All right, let's take a look at this. Let me go a weekly chart real quick. Let's see, are people still listening to me? Do I still have people here, or you all leave? No, I got some people still. Okay, cool. Let me see this one over here. All right, I got a couple more people. All right, I'm gonna wrap this up here momentarily. Now look at this. This is the market cap. I guess this includes Bitcoin. I don't know. They have different ways that they weight these things. Yeah, you have this little, we can argue that this is a buy signal coming off this failed low, but it doesn't change the nature of this broader structure. Overall, sure, you can argue that this is one gigantic higher low, right? This overall consolidating structure here that's pushed these lows, but this is too early to make any judgments, right? So I wouldn't do anything with that. I wouldn't do anything with this until major resistances are cleared. That's a minor resistance right there. This right here is more of a major resistance, and that would be 3.5 billion, 3.56, whatever. That's what you want to look for. If price can work, if this thing can work its way back up there, then perhaps we have a change taking place, right? Going back from bearish maybe to range bound, possibly bullish. But macro fundamentals have to support that, right? Money is not going to just come out of nowhere. So I would expect some sort of participation from the Fed. And what I mean is lowering rates, okay, or rates going lower. We don't have that yet. That lowering rates are what bring in speculative bubbles. Remember NFTs? What do you think that NFTs are a product of? Do you think they're a product of, oh, some genius came up with the idea we can sell art piece, graphics for thousands of dollars? No, that's a result of people having too much money to throw around. They're like tulip bulbs, right? That's what an NFT is, because it's a worthless graphic. Yeah, sure, it's a great way for an artist to make money. I agree with all that. I think that's great. But the NFT itself has no intrinsic value. It's based on perceived value. If your artist makes a rare piece and everyone wants it, the value is going to go higher. Otherwise, it's a worthless graphic, okay? It doesn't produce products. It doesn't produce services. It's not a company. It doesn't produce revenue. It's not an asset unless it's a rare thing like a painting, right? And that painting is worth millions of dollars. Sure, that's an asset, like a store of value, like gold. But otherwise, they're worthless. And anyone that's messing around with NFTs is nuts. But the point is, hey, it's a gambling game, right? It's like playing poker, I guess, sort of. Not really. It's more of like playing the slots. But you understand what I'm saying? So that's what you'll see when the speculative money comes back. That's why I bring that up. You'll see a change in these things. Until then, don't get mixed up in these little blips that don't really mean much, because that doesn't really mean anything. So thank you for asking. Okay, BTC making another breakout. I'm tempting right now. Right, it's trying. But again, we're in holiday mode here. The US, everyone's on the beach here in the US, okay? No one's in front of their computer except for me. I'm the only one in front of my computer. So you have to account for that, right? We'll see how, when volume comes back, we'll see how things go. When the S&P is moving, when the bonds are moving, when money is flowing back into the system. Keep in mind, I wouldn't expect a spectacular week with NFP on Friday in terms of volume to begin with, especially since everyone's on the beach drinking beers and eating hot dogs, except for me. All right. Okay. Right. Broke 31K. All right. So I look in. People making a big deal out of Bitcoin. Who cares? Right? It's meaningless. Who cares? Doesn't mean anything. I just want to show this to you. Broke 31K. Right? Let's put 31K on the chart. Where's 31K? This is 31.4 over here. Okay. So again, I mean, who cares? It's meaningless. Doesn't mean anything on this time frame. If I was looking at a 15-minute chart, sure, that could be a couple 100 points or something. But meaningless. Don't get distracted by noise. Okay. All right, Kai is okay. Chart for the altcoin with ticker AAV has now okay. Oh, interesting. Okay, that's interesting, Kai. Thank you for informing me on that. I wasn't familiar with AAVE, but again, it's a good gauge, just like the total. Remember, Kai? In fact, you're the one that brought up total. You're the one that told me about total. And you can use those gauges to help you, get a sense of is money generally coming back in. But don't use those things in isolation. All right. What's NFP? NFP means non-farm payrolls. It's the most important economic event that we get the first of every month. Look on your economic calendar. It's a U.S. It's a jobs report from the U.S. basically, U.S. unemployment or whatever, right? The jobs report. So it's an inflationary gauge that the Federal Reserve uses and why it's so important. And it moves the dollar. If there's a surprise, it can also be a non-event. Keep in mind. All right. All right, people. Okay, cool. So I actually answered everyone's questions. It's because I don't have a lot of people here today. That's okay. All right, people. So you know what? I want to thank you all for spending some time with me here today. I hope you all got something out of my stream. I mean, that's my goal. I want you to come out of here informed, confident, and have an idea of what to anticipate over the next few days. Again, we talked about supports, we talked about resistance levels, we talked about what we could see, what some potential scenarios may look like in Bitcoin. So you should be preparing, not reacting. You understand? That's my goal here. Why I do these streams is because I want to help you prepare. Right? There's no hype here. I'm not selling you a dream. Right? There's no dreams for sale. I want you to be objective. I want you to learn how to get that objective confidence by extracting particular pieces of market information from a chart. Charts are imperfect, but they can at least give us a way to gauge risk. They're not going to tell us about what's coming, but we can get a sense of probability, from charts and from some of the information. But again, always accounting for the risk. Like I said, we have to, as a trader, we have to make decisions in the face of incomplete information. So forget news, forget logic, forget all that other nonsense. Look at levels, look at structure. Probability comes from there, okay? And then adjust to behavior. Let the market speak. Let the market make the first move, okay? I always tell people, don't try to figure out where it's going next. That's what everyone tries to do. Let it go where it wants to go. Be prepared for what it does after that. Right. So if the next move on Bitcoin is to 32K and it reverses and gives a sell signal, well, there's a potential idea there, right? And you should be prepared for that. If Bitcoin turns now and goes to 25K, that's a support level, right? And buying would make sense in that area if it can give you the right look. And of course, it would be considered aggressive. So you'd have to adjust your expectations. Again, you're prepared because you know what to expect there and you know what to do. You're not reacting. Understand? Does that make sense? Okay. No problem. All right, so I'm going to wrap this up. Okay, no problem. I said, oh, cool. I appreciate that. Cool. I'm glad to hear that. Hey, Izzy, all right, no problem. All right, everyone. So again, I want you to enjoy your holiday, enjoy your day, enjoy your evening, wherever you are in the world. And thank you very much for watching.